right. Well, John, we're going to talk about a couple topics today. The first one I wanted to get kind of I have some thoughts on this, but Hertz has been in the news a lot. It might be the first ever company to finance their bankruptcy through the issuance of stock. Have you ever heard of something like this in your life?
I haven't. I think from the standpoint of Hertz, it's genius. If you're going to go bankrupt, you might as well have some, I don't know, I guess naive stock investors finance your bankruptcy. It sounds like a great idea. If you're the company, not so much if you're the investor.
People who aren't as familiar as you and I are with, finance, when a company declares bankruptcy, common shareholders almost always get wiped out, right? I mean, Can you even remember a time?
No. In fact, the reason why the returns to stock are higher than the returns to bonds are almost for this very reason. It's that the risk is higher that you're going to be completely wiped out. Whereas at least if you're a bondholder, you do have a claim on the assets of the company. But with an equity holder, I mean, after the bondholders make their claims, it's very unlikely there'll be anything left over for you.
Right. I was looking at it today. Yeah, it's up. Earlier today, it was up 39%, and it's up 44% today.
Yeah. So to be really clear, what you're saying is, here's this company that has declared bankruptcy.
At some point, it's going to go to zero. It's like a greater fool's theory, right? Like why at some point when it is bankrupt and all the assets are liquidated and all the debtors are paid off, the likelihood of there being any residual value for common shareholders is pretty infinitesimal.
And Hertz has taken the opportunity to issue more stock, raise more money.
And I think there was a thing in court where a judge they were trying to get approval to do this. And basically the disclaimer was, you can risk losing all of your money by doing this, right? There was some disclaimer to the next issuance, but that's kind of the caveat emptor on all stocks, right? All stocks could potentially go bankrupt. So the disclaimer seemed just like it would be for a normal a company that isn't in bankruptcy. So it'll be interesting to see if they're allowed to do that. And one thing that you and I have talked about a little bit, but I guess a rumor on Hertz is that a lot of millennials are using Robinhood and sort of free trading. Robinhood's a free trading app. Now a lot of brokerages allow for free, buying and selling of individual stocks. Do you think it's a good thing or a bad thing that millennials are getting back into, not getting back into, but maybe dipping their toe in investing for the first time?
I think it's a good. I mean, one of the things we've seen is that whatever your experience was in your 20s and 30s, that really shapes your view of markets for the rest of your life. And one of the things millennials have experienced are two big economic crises and market crises. So, if history is any guide, they're going to have kind of a skeptical view of the markets going forward.
They have the biggest cash allocation outside of people who grew up in the Great Depression. So it's like the silent generation has the most I think millennials might have even more percentage of their assets in cash.
So it supports that idea that they've been a little stung. So it's good that maybe they're generating some interest, but is this the right way to do it? I'm not sure that buying bankrupt companies is the way I'd go.
If it's $100, that's right. Learn from your mistakes, and if you're making it with small dollar amounts, it probably isn't as big of a deal. The number of accounts Robinhood has opened is some order. I want to say it's something like 2 million have been funded. So it's just kind of crazy. And I think what's interesting, I was talking to somebody the other day, they were like, well, it's free. Well, if anybody tells you something is free, you should probably investigate a little bit more. The two ways Robinhood makes money is by cash, right? Being able to lend out the cash, but then also selling order flow. So as those purchases and sales go through, Robinhood is actually selling that information to high frequency traders to profit off of it.
What was the book?
Oh yeah, the book was Flash Boys. It was the same. The guy who wrote Moneyball, Michael Lewis. It's a really interesting read. And then what was the next topic we were going to talk about? You just wrote it down.
I think big tech was one of them, and kind of an interesting topic right now. I know big tech companies have just, their stock performance has just been incredible. And I was listening to a super interesting podcast with Ben Inker of GMO, and he basically said 10 years ago, he said there's no way that tech companies are going to be able to continue their kind of dominant market performance unless they create a monopoly. And what Ben Inker said was, if we look historically, monopolies haven't lasted very long. And the reason they haven't lasted long is because prices to consumers go up, and the consumers they won't accept it anymore. And so the politicians get involved and regulate these companies. But with big tech,
they control some resource, right? Like Standard Oil controlled petroleum. The resource in this situation is demand and attention. How to get
customer data.
Customer data too, right?
So one way to say it is the customer is the product.
Right.
So unless we convince the customer that having their data be taken for free is not in their interest, unless we decide we're going to regulate that, exercise sovereignty over data, that monopoly is probably going to exist. And
we're all kind of willing participants in the monopoly. We're going to, and when I buy running shoes or something, it's almost instinctual now that I open my Amazon app and start looking for men's running shoes. They control, it's not even a question to me where I'm going to go first to look at that. So it's just interesting that we're all we're participating in it willingly because of the element of convenience. So I think it'll be a weird tact for the government to take to bust that up.
Yeah. Although I think Europe, it sounds like, is making strides right now and saying, hey, look, I think it was Google, they're basically saying, is using their market power, or maybe it's Amazon, using their market power to basically crush, smaller competitors. And so they're going to definitely face, I think, some regulatory headwinds coming up. So I think the next thing we had on the list was, was insurance. I think, which is a super interesting topic right now with coronavirus. And what does coronavirus mean? And we know that there's all these things in our lives that are going to change as a result of coronavirus. But probably one of the most thoughtful people when they're looking just at data and change and the changing of risks are insurers. Right. So, and you had some kind of interesting thoughts on that.
Yeah, it came about when so I had my car and homeowners insurance through Safeco, and without even asking, they gave me a refund, a partial refund for I think March and April, because they're getting these premiums. No, people aren't driving, so they have this extra, funds, and they're returning them, in an act of goodwill to their clients. But taking that out even more, I read an article about life insurers trying to change their underwriting policies with coronavirus. And I think it might have been specific to frontline healthcare workers, where they weren't sure how to handle that. And then if you think of if this were to become endemic, what does that do to, when you get life insurance, they take everything, right? They've got labs, they want to know everything. So if there is morbidity, kind of the correlation of coronavirus and underlying health issues, what does that do to somebody's ability to get insured? What does that do to a premium, even for a healthy 25-year-old that buys or maybe a 35-year-old that buys a 30-year policy? Well, if it's endemic and there isn't a vaccine, does that drive up, the cost of that insurance? And to your point, like, actuaries are probably, a lot of brain power. Nobody really has great data on how this is going to work. So it's just interesting to see the shifts. I would imagine, auto insurers right now are, collecting quite a bit in premiums and not paying out quite as much in claims.
Yeah. Well, just when you apply for life insurance, they ask you if you smoke. I wonder if at some point they're going to ask you if you've had the vaccine. If we do get a vaccine, so maybe, for the anti-vaccine community, they may face some difficult financial decisions when they're trying to get insurance.
Yeah.
But yeah, well, a lot going on right now. Interesting times.
Yep. I think the last thing we were going to talk about was PPP.
Oh yeah.
Just because I think in our very first one of these, Rob was on there. I talked about how it might have even been in the CARES Act article where I said, in theory, the CARES
Tell
Act.
everybody what PPP is.
Oh yeah, sorry. Paycheck Protection Program. So I worked a lot on that recently through the application process. And it's like every Friday night, the Treasury drops new guidance as far as how the program is going to work. So the rules have changed so many times. And I was just telling you earlier that, the title of the document they released last night was the interim final rule on revisions to the first interim final rule. There are, under the program rules, there are probably about 30 documents that compound upon each other, and trying to keep all those rules straight is pretty insane. But the thing that they did recently that's great is they extended the what they call the covered period. So when people are allowed to use the funds from 8 weeks to 24 weeks, which makes all the forgiveness calculations much easier, because people think of the PPP thing as money they can just spend, but really it's the Paycheck Protection Program. And if you think about it, it's kind of like unemployment administered through banks and employers, right? You have to pay these people and keep them employed. So the amount was basically 2.5 months worth of payroll. Well, now if you have, 24 weeks, which is closer to 6 months, right? You're going to be able to obviously use that money just for payroll. So there was a lot of angst over, if I use it in a certain way, is it not going to be forgiven? I guess that's a point I should make too, that the PPP loan is kind of a loan, but it's a forgivable loan if you meet sort of extra criteria. So that was some good news for business owners.
Yeah.
Even though I was cracking up last night when I saw the title of that document, just sums up in a nutshell how confusing the rollout of this has been.
Yeah, it's like when you create a document internally in any company, and somebody creates the final document, and then somebody adds something at the final.
Right.
But this would be the final.
No, I mean, I think just the choice of interim final rule, which there seem to be 16 of them, that, the temporary permanent rule.
Right.
So
Yeah.
it's just
jumbo shrimp. So there's still money in the pot, right?
There's still money in the pot. I haven't seen anything as far as how much new demand there has been. One interesting thought, and these new guidelines are very much more favorable for business owners, but I saw a really interesting stat that it was almost, can't remember exactly the numbers, but under the number of loans under $250,000 was something like 75 or 80% of loans, and above was the rest. But the dollar amount of the PPP program, 80% of the dollars, or some really high percentage, was of the loans above 250. And so what a lot of tax professionals are kind of pushing for is to have just kind of rubber stamp forgiveness for the huge number where those borrowers, right? If you're an owner and you have 2 or 3 employees, you don't have the time to be a CFO. So those loans are the ones that need the most handholding, the most work, probably the hardest to kind of get straight. Whereas these big loans, they have a CFO or they have a bookkeeper, office manager, somebody who's going to be able to take that work on and do it correctly. So anyways, I guess I'm hoping for that, just because I, have seen or witnessed some of the confusion and pain for small business owners and trying to kind of navigate all this.
If everything wasn't perfectly buttoned up on a $20,000 loan, don't worry about it. Let's not spend our time there. Spend your time on the big dollar one.
Right.
Right. Yeah.
So.
All right. Well, it was good talking with you.
Yep. Good first go around. We'll have to figure out what we call this.
We'll do it again next week.
All right. See ya.